GETCRACK. Wake up, motherfucker.
Markets this morning. Joining us right now is Ed Yardeni. He's the president of Yardeni Research. And Ed, you are joining us on a morning where we have seen new highs once again for both the Dow and the S&P 500. What do you think of this rally that we're on? What kind of legs does it have? And what would you tell people in terms of where they should invest right now?
Well, I think they should stay invested. It's hard to tell somebody who's been in cash to get into this market right now. Things are not exactly cheap, but clearly those who are getting into the market are going into the small and mid-cap stocks, which have been relatively cheap, and that's fine. And then I think people are also going into the S&P 493, which are cheaper than the Magnificent Seven. But all in all, I would stay invested. The outlook remains fairly upbeat. Clearly, there's risks out there, but the economy has proven itself to be remarkably resilient. I think interest rates have normalized. I don't think the Fed really needs to lower interest rates. And meanwhile, the outlook, I think, is going to be somewhat bumpy with regards to issues of tariffs, but tax cuts and deregulation should be good for earnings.
So the entire idea of, don't fight the Fed if the Fed is continuing to cut rates, that has been one thing that has driven this market. You think the baton's been handed off at this point to maybe a more business-friendly administration that's coming in, and the idea that corporations are going to be able to continue to earn pretty significant amounts of money?
Absolutely. And not only that, I think that we are still in the early stages of a productivity boom. Productivity really was extremely low back in 2015. It was almost down to zero. And we've seen it go from 0.5% to about 2%. So we've seen a quadrupling of productivity since 2015. And I think productivity growth can go up to 3 to 4%, which sounds delusional, but the reality is we've had productivity booms in the past, in the 60s, in the 90s, and they also showed productivity going to 3 to 4%. And this productivity boom probably has more going for it because the technologies that are out there lend themselves to being used by many more business kind of applications than we had even in the 1990s.
You think this is entirely AI driven, or we're still pretty early in the AI run on things? Right.
No, Becky, we've been calling this the roaring 2020 since the beginning of the decade, and so far so good. And it wasn't based just on AI. It was based on cloud computing. It was based on automation, robotics. There's a lot of moving parts here on the technology revolution, and they all coming together. But I think the key driver is a shortage of skilled labor, and technology is able to augment the productivity of workers. That allows for wages to rise faster than prices, which is actually what's been happening for the past year and a half. So all in all, I think productivity is really the story that's driven the economy so far during the roaring 2020s, and I think it'll continue to do so up ahead here. And I think deregulation helps, tax cuts help. We'll see where the tariffs go. They could be that bump in the road along the way, but I think we're heading to 7,000 on the S&P 500 by the end of next year, 8,000 by the end. Well, 7,000 to 6,000 is doable in my opinion, and then 10,000 by the end of the decade. So that's my Thanksgiving gift to you all.
Okay. We'll take a prediction like that as we head into the holiday. Ed, you're the second person in an hour who's told us that we should be looking at the other 493 stocks. Peter Bookvar was on with us earlier saying the same thing. How hard is it to find bargains there? I mean, it seems like a pretty common mantra that people have been saying for a little while now. Look at those other 493.
Well, I guess my view is when you look at your portfolio, think of every company as a technology company. They either make it or they use it. If they don't use it, they're going to be a competitive disadvantage. And so I think there's a tremendous amount of pressure to use technology. And it's not just pressure. I mean, it pays off. And so I think there's still opportunities in technology, believe it or not, and in communication services. But in the rest of the market, I think financials are still have opportunities, industrials. Consumer discretionary, I think there's some clunkers, like healthcare is going to be challenged by RFK and Dr. Oz. We'll see how that plays out. And materials and energy are being challenged by a fundamentally weak outlook for the Chinese economy as well as the European economy.
What's up? It is November 27th, 2024. All right. So Bitcoin roared back. Got a good thing going there. NASDAQ down with following the semis. Natural gas down. So if you shorted natural gas, get out, I guess. I use cold, KOLD. Here, I'll show you. That's how you short it. Natural gas back down, went back up on Sunday to Monday. Shorted again. This is the futures thing. Let me get the 275-minute chart. Yeah, so if you look at the 275-minute chart for futures, this don't look good. Now I'm out though. I would probably short it again on Monday. I don't think I'm gonna get back in Black Friday into the whole holiday season here. So we'll see if I short this again. Bitcoin doing quite well. So my little gamble yesterday to change from being a short on MSTR to being a long has success. We've hit where we should stop. The 95,656 to 96,334 is the range. You see this on the daily chart here. It bounced off the 18 moving average here, daily moving average. And then if we look at the 4-hour, we are hitting the flattened 40 4-hour moving average. So this is a good time to take a break. And we'll see if I'll add more to what I have. So I have Mara from yesterday. It's up about 6.77% right now. I have CLSK up 6.45%. I have Hut, the strongest of the mining stocks here, up 16.09%. I have Wolf, another good one, broken out above the $6 area. Yes, so I have all that from yesterday. I will start adding more to it and get more aggressive. I have canceled out using MSTU. MSTU is broken for some reason. It should be 2 times MSTR. It looks like it's broke from all the volatility recently. Use instead MSTX. Okay, MSTX. Use that one instead. I've moved over to that one. So MSTX, the Defiance Daily Target 2X Long MSTR ETF. All right. So far, so good with that trade, those 2 trades. Now, GameStop. GameStop still trying for that 32 again. Let's see if we can break out into next week. So GME and HIMS tried. It really tried this morning to push up 10% to $35. It pulled back for the rest of the day. So as you can see, we're stuck here now again, back at $30. I don't know what this means. Honestly, this is basically a new high, trying to get to 35 again. Like, let's look at yes, we are above in new high territory. So it's not going to be easy to keep pushing this thing up. But if we look at XBI, the biotech index is up 1% for the week. And I may get back into LabU as well. So LabU, and I'll have to look at other biotech stocks to see what's good, what's cooking, and recommend those. All right. So I'm going to play the ad for you to support the channel, okay?
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go.
Alrighty. So we can go look over some more things later on. So let's see. Stocks, semiconductors. Yeah, this is a critical moment here. It tried to break down below 209 on the SOXX ETF, iShares Semiconductor ETF that follows the Philadelphia Semiconductor Index. And then you have the alternative ETF, SMH. This is not looking good. If it breaks down here below $237, so that's it. This is it. It better recover during December, or else the NASDAQ will have a hard time moving up. You see the NASDAQ right here, still stuck just above the old high in July, thanks to NVIDIA. So you got to pray for it. Otherwise, might have trouble in December for all these NASDAQ stocks, large caps anyway. And IGV went down, software, because Google lost the antitrust lawsuit for Chrome. Okay, so that's news. And I guess I can cover that some other time next week. Okay, guys. Anything else? I see RX up. So whatever I bought below $6 is trying again to get above $6. Trying to get to that blue rectangle here. So on the week, it's up. How much? 10.88%. Try to get that into that blue square rectangle area and push forward into $8 from $6, and we'll go from there. If it's really good with the XBI and the Lab U, all the biotech stuff, yeah, that should be something to watch. Okay. All right, play another video. So we're going to go through some tariffs. A lot of tariff videos, okay, today. So let's see.
Haley, great to be with you. And I think just listening to you talk to your colleagues a moment ago about President Biden trying to secure his legacy, set the agenda in foreign policy up until his last day in office. President Trump, at least on trade and immigration policy, has already seized control of those agendas. And I think loud and clear, he has broadcast his opening move in what is always a trade negotiation. You know, whether you put on tariffs or not, or threaten to put on tariffs, it is intended at least to extract some sorts of concessions from trade partners. In this case, the surprise is that it has come now, I think. And the surprise is that, or what is not clear, is exactly what he hopes to get in return. I'll just say one quick thing, framing it in terms of a national security threat, as the president-elect has done, I think gives him some leeway legally, at least, to impose tariffs without a lot of extra congressional authorities to do so. So that may be part of what he is thinking right now. What we don't really know is, again, what he hopes to secure.
Well, there's also the question of what the markets are thinking about all of this, because right now, Christopher, I'm looking at a fresh record high on the S&P 500. I would describe the general attitude today as pretty nonplussed. Is that appropriate?
Well, I was trying to do the joke about denial is a river, is not just a river in Egypt, but I think there is a sense in markets that because, again, this is something that is coming out 2 months before the president can do anything. And I think even then, I think he would issue an executive order, and it may take some time for those tariffs to take effect. We'll know much more in the next 2 months how Mexico, Canada, and China may respond to this. I think the fear for those of us who look at this from a longer term is that these are probably moving goalposts. And even if Ottawa, Mexico City, Beijing were able to satisfy the president's concerns, the president-elect's concerns right now on drugs and immigration, he's got a whole list of concerns that he is ready to come back to them with and use tariffs as leverage. So I would expect, these tariffs, at least in some form, to start getting phased in. Maybe not a blanket tariff the way he announced last night, but something is going to make trade with those countries more expensive, at least in certain industries. And probably we're in for a longer and more protracted set of negotiations.
Well, Christopher, it is last night that we learned about this new threat. We ended Monday with that after beginning Monday with the initial market welcoming with open arms of the selection of Scott Bessent for Treasury Secretary. What check on not just the tariff policy, but all of these kind of economic policy suggestions from the president-elect could Bessent actually be in this incoming administration?
Well, the president is the president, and the secretary is just the secretary. I think Scott Bessent is obviously a very experienced, market-savvy investor who can at least give the president advice on how markets will react to certain things that he is doing. And the president obviously does care about that because he talks about certainly the stock market as one of the measures of his success or the success of his presidency. So I'm sure that is part of it. One only wishes one could be in the room to know just how much Scott Bessent was part of this announcement, or whether, welcome to the team, this is our first move. And whether he's going to be trying to catch up with the president and the trade agenda. But we'll have to see how that plays out. As you recall, Secretary Mnuchin was a moderating impact on a lot of the trade tariff agenda in President Trump's first term.
All right, let's go to the next video. Got tons of videos on tariffs. Yeah, let's see.
Tariffs were to become a reality, what would the economic impact be?
Oh, the economic impact would be huge, which is why you wonder if he really means it or if this is some kind of pressure tactic. Canadians have already said they'll up their presence at the northern border and try to work harder on keeping people from crossing the border into the United States. And maybe that's what Donald Trump wants. But if you look at what his remedy is, it would cause untold calamity in markets, not just in the United States, but in Mexico and in Canada. There's so much stuff that goes back and forth. And I've used this example all day of auto parts, $40 billion worth. Some of them cross the borders 6-7 times before they get put into a car. So how do you know what's going to be tariffed? Vegetables. We get 90% of our avocados from Mexico. We get 2/3 of our tomatoes. So what are we going to do about that? Are we just going to, raise prices on American consumers, or stop buying them, stop them at the border? There's a lot of things that don't make sense about this proposal. So maybe it's just a pressure tactic.
But it also could just be a starting point, right? Michelle, he said additional tariffs on China, which suggests there could be others layered in.
Additional tariffs on top of additional tariffs is kind of how he put it in his Truth Social post last night. Yeah, this is typical Trump. I mean, I think no one should be surprised by this who was around for Trump 1.0 or looks back on how this played out then, or has read or heard about his book, The Art of the Deal. This is exactly how he lays out his negotiating tactic. He wants to get out in front. He wants to have the leverage, and he wants to bring people to the table and force them, as you've seen from Canadian Prime Minister Justin Trudeau, to engage on the matter. And this really does marry a few of his favorite talking points on immigration, on fentanyl, on trade, and by association on taxes, because he's saying tariffs will help pay for his tax cut plans.
Well, and on tariffs and taxes, there will be other players in this game in his administration, like his nominee for Treasury Secretary Scott Bessent, presumably Howard Lutnick for Commerce, and today Bloomberg reporting Kevin Hassett to direct the National Economic Council. They all could play a role in here.
They could all play a role. Kevin Hassett, traditional conservative with traditional conservative views of what the economy should do, free trade and things like that, who put those aside to be CEA chair in Trump's first term. Now he's going to be head of the National Economic Council, and he'll be the one who's supposed to be the referee among all these other competing officials in the administration. I thought it was interesting yesterday that markets got so excited because Scott Bessent had a 3+3+3 plan to cut the deficit down to 3%, raise growth to 3%, and taxes as well. The problem is he doesn't have any authority over any of that. It's all housed in the Oval Office, basically. I mean, Russ Vaughn over at the Office of Management and Budget will play a big role in what the spending and deficits are. But this all comes down to the same thing that we saw, as Michelle said, in the first term. It's all about Trump and what he wants. And this is his style. There's no reason he couldn't have gotten on the phone and called Justin Trudeau and said, hey, we need some help with this here. But instead, he does it this way. He knows we'll pick up on the tweets and we'll amplify it. And then everybody in Canada will have a heart attack and everybody in Mexico will have a heart attack, and he might get some results.
Reaction to this. How credible is this threat from President-elect Donald Trump overnight? Well, Jonathan, good morning. Happy Thanksgiving week to you and everybody at Bloomberg. This is a critical threat by President Trump because we have unprecedented border problems with particularly Mexico on fentanyl and nearly 9 million people that have crossed the border. We've not been able to secure the border under the Biden-Harris administration. This was a major campaign point for President Trump. And so I believe that he's stepping up and making this statement about tariffs to tell both Canada and Mexico, we have got to get our border security in the United States squared away. And then secondarily, I think he's very concerned about imports from other countries that are going to try to take advantage of the USMCA and bring in products through manufacturing in Mexico that may skirt some of the requirements of USMCA. So both those things, I think, are on the table. Border security and trying to strengthen the parameters of USMCA for some exports from outside manufacturing companies.
Congressman, so President-elect Trump sees immigration, illegal immigration, as the problem and tariffs as the remedy. But you just mentioned USMCA. If we have an executive order with these tariffs, that overrides USMCA. Should President-elect be getting Congress on board, members like yourself?
It's important to bring Congress into the discussion with the president as soon as possible. But remember, when he was president, he worked very hard with Canada and Mexico to renegotiate the North American Free Trade Agreement and create the USMCA. During that time, he also had strong cooperation from Mexico on his Remain in Mexico policy, which was to say, look, if you're seeking asylum in the United States, our law says you have to do that from a third country. President Biden has just waived that rule and allowed millions of people to come into the U.S. while they seek asylum. Probably 90% will be required to be deported because they're not eligible to seek asylum. So I believe President Trump's also using this tariff threat to tell the new government in Mexico City, let's get serious about the migrant flows across Mexico's border and get back to our Remain in Mexico policy or remain in a third country policy.
So is it just that, a threat? Or do you think come January he's going to follow through with 10% on tariffs on China on top of others, he says, and 25% when it comes to imports from Mexico and Canada?
Well, we know from his first term in office that he's willing to deliver on his threats on tariffs to bring other countries to the negotiating table, both on economic and trade issues, as well as other matters. And I certainly consider border security a top issue coming out of this election. People are sick and tired of the crime impact, the fentanyl impact, the death in our communities, and the overwhelming loss of control from Tijuana to Brownsville of the Mexican-American border. So I believe that, yes, he would deliver on this, but he's also using it as a lever to get serious conversations in Ottawa and Mexico City with Washington as we turn the page and have a new presidential administration.
Should we be worried? Should we trade off the threat of tariffs, Guy?
I think you can trade the bond market off it. Clearly, the equity market is not worried, but I think the bond market should. Next year, we're going to have $1.5 trillion just in interest to service the debt. Think about that. And then that's on top of all the issuances that have to be done in 2025. Now, this might be the right course of action without question. But again, I think it's inflationary. And I don't think the bond market at 4.3% to 10 years of pricing it in. At 4.5% 2 weeks ago, I don't think it was pricing it in. So for me, the way to play this is through the bond market, thinking yields will go higher.
You hear about it, like on the headline, pushing back against Trump and against the U.S., who is the biggest economy in the world. Mexico right now recently overtook China as being the largest source of imports into this country, a little over 15%. It was only 12% a few years ago. So Mexico has been picking up steam. And the question is, if you're Mexico, do you really want to take the U.S. on? I don't think so. Having said that, you can't look like you're just going to fall down. And I think if you look at certain sectors that were most hit today, the auto sector specifically, it's argued that some 97 billion, I'm quoting actually Emmanuel Rossner at Wolf, who said 97 billion worth of auto parts are shipped to the U.S. from other countries, but specifically through Mexico and Canada. So there are places that are particularly well, I think hurt more than others. GM, which had also been riding very high coming into today, I think that partly explains some of that move. But look, I think we've speculated now for weeks. We had a day yesterday. This is why this is fascinating stuff and why this is a trading show. Because yesterday we had Scott Bessent, new Treasury at least Secretary, proposed is someone that says, hey, look, I'm going to do my best, or at least it was thought he's the moderate voice in the room, and the room that's going to be worried about deficits and probably not push as hard on tariffs. We'll see.
I think it's a lot of bluster. I mean, we have 4 years to kind of see what happened in the first administration. We've heard lots of tweets over the last 4 years. And you think about it, I mean, he has to kind of try to follow through with some of the promises he made on the campaign trail. I go back to September when he threatened John Deere, great American company, with 200% tariffs for equipment coming in from Mexico. Well, at the end of the day, 5% of their sales come from Mexico, right? 3/4 of their production happens here in the U.S. So I guess at the end of the day, a lot of U.S. companies are probably not going to make any big moves as it relates to manufacturing based on these threats, because I think that if you look at all the nominations, I think a lot of folks, to Tim's point, look at a guy like Bessent and they say these folks are going to have some pretty decent influence, not too different than Gary Cohn in the first administration. So I just don't think you're going to see too many big decisions by U.S. manufacturers based on these threats right now.
And overall, the markets are acting fairly well, taking all this in stride, Katie.
Yeah, I would agree. I mean, we have very positive momentum, of course, behind the major indices, and it shows optimism around the administration. So we got to stay with the momentum, really. The relative performance, U.S. versus international, especially Mexico, maybe to a lesser degree Canada, is still very positive. And we want to stay on the right side of that trade, at least as long as it's working, and it's still working.
All right, let's get some update on the stocks right now. 45 minutes into the close. Let's see what we got. QQQ trying to recover. NASDAQ 100, 505 right now, down 0.78%. Okay, so it was down like over 1.2% at one point. Okay, let's go back to cold. So cold, I was saying, is to trade for natural gas short. So KOLD. So I did it twice here, from Thursday to Friday last week. Then again from Monday, Tuesday to Wednesday. So we're done with those two trades. I don't know if you want to really short it again over a weekend. That's pretty dangerous. Oh, let me see this. I forgot this. Okay. Here. So this is a cycle analysis on it. We have one main peak for the 260-day cycle, another one for the 76-day cycle. Once that turns into December, it'll go back down. So I'll probably short it bearish as we draw down the whole supply of natural gas, and then it'll go back up into the spring. So coming back into February and March, we'll find a dip. We'll go back using BOIL. BOIL is the ETF going the other direction, bullish. Okay, BOIL. All right. So let me see some more videos on tariffs here. So I think this person's analysis is pretty good. And then we'll go into lumber, energy, and then home building, and then we'll close it off there. Okay.
The Street's take as well on the latest inflation print, and bring in Jefferies chief market strategist David Zervos, who joins us here at Post 9. I saw you reacting to Steve off camera. Your thoughts?
Well, first, just let me apologize for sounding like RFK Jr. a little bit. My voice is just running out of steam after the post-election period. It's a lot of calls with a lot of clients and a lot of running around. So I wanted that caveat up front. Okay. I don't think the data matter that much for the Fed. This was a pretty down-the-middle data print. It's an important one, but I don't think there was any surprise that would get them to move either way. I think the markets so far have told you that. We just have a lot of really big picture stuff to talk about. Like, I know it's fun to talk about the day-to-day and what's moving the market, but I'm just getting so excited for the deregulation trade, the smaller government trade, the fact that the bond market, that yields are lower than they were on November 5th, in the 10-year by 5 or 6 basis
Right.
points.
Trump trade was supposed to be a big steepener.
Big
right?
steepener. And, it's stocks are up, dollar's stronger. It's all kind of working the way many thought. I mean, not the 17 Nobel laureates that thought global Armageddon would happen if Trump won. But I really am focused on this long end of the Treasury. I think that's the most interesting story of the last 3 to 4 weeks. And it's telling us something. It's telling us people are getting excited about the deregulation trade and the lower costs of production that are coming, and possibly the less significant government sector that's, I think, starting a lot of conversations with our clients about, could we see some slowing in the beginning of this administration as contract payments are ceased, consultants are cut, some job losses in the government sector start to come in, and that totally changes the Jan to March to June Fed sequence if we start to see very different job data, but coming more from the public sector than the private sector.
Does that mean that GDP forecasts have more downside bias?
So there's this initial trade, and then there's the long-term trade. Are you opening up the economy to better use those resources more efficiently in the private sector? I think that's the idea.
Well, Musk called it temporary hardship.
And I think the market's starting to sense that a little bit. We'll see. The short-term data is going to be really interesting to watch. Jan 20th, we're going to see a lot of changes really fast. We know there's close to 300 executive orders that the AFPI have put together to put in front of President Trump on his desk. A lot of them to do with deregulation, many with immigration and other things. But I think a lot of industry shackles are going to come off. But a lot of changes in Washington are going to happen with Department of Agriculture, Department of Education, Department of Energy. These are big, big changes in the way we've done business as a government for decades. This is a Reagan sort of moment.
But one thing you did not mention that you were excited about is tariffs. And that's something that we're already getting a pretty good whiff of.
I think it's always something I've pushed back to the side along with immigration, because I just don't think the stagflationary outcomes that people are pointing to, the magnitudes are big enough. We'll see. We saw tariffs last time. We saw 17, 18, 19. He did it. What happened to inflation? Not much.
They weren't as widespread, though.
Well, we
they were
don't
more
know
targeted.
yet.
Steel and aluminum.
We
China.
don't know yet. We don't know whether it's tactical or not. Let's see if his tactics work to get prisoner releases, get open markets for our products, get fair trade, get geopolitical tensions down. We'll see. That's the history of Trump tactics, is you go in big. And I think Wall Street's giving him the benefit of the doubt on the art of the deal style, and they're not going, oh, yes, you're definitely going to do this number.
The market closed at the high yesterday.
And I love it. I love the way we're lining up.
Family home sales plunging over 17% in October. That's the biggest month-over-month drop since 2013. Meantime, the Homebuilders ETF is up just over 3% since the election, as investors weigh a Fed that's cutting rates versus a new administration that's threatened wide-ranging tariffs on key building materials. Joining us now is Cheryl Palmer. She's chairman and CEO of Taylor Morrison, one of the nation's largest home builders. Great to have you, Cheryl. So how much are suppliers looking to push inventory into the U.S. ahead of late January? How much of an impact would these tariffs be, you think, on your business, your industry, if they go into effect?
Well, thanks for having me here today. It's a great question. I'd start with, it's probably a little too early to fully understand the real impacts. But having said that, we have for some time intentionally been developing a more resilient supply chain over really the past several years, continuing expanding the work, the practices that were necessary during COVID, not necessarily to prepare for any one specific event, but to keep us prepared and flexible for any potential impacts. And we've done this a number of different ways through SKU rationalization, shifting much of our product to domestically produced products, strengthening the relationships. I believe that, we will see some impact on cost, probably not on availability, The threat of tariffs in Canada and Mexico may provide a bargaining tool to allow for some renegotiation to strengthen the replacement for NAFTA. So we'll see if that's helpful. Those tariffs are already in place in China, as you know. So this will be an additional 10% burden. Many of our manufacturing partners, I think, have already shifted to countries other than China to avoid the current tariffs. So I don't think they'll be as affected. We'll probably see some margin grab from some.
Okay.
When I think about China, it's probably more electronics. When I think about Canada, the primary concern, I think, will be energy and lumber.
Makes sense. So
right?
I want to also ask you about your business specifically and the buyers in your business. Tell me about, in 2025, maybe beyond that, the importance of the move-up buyer, continued importance to margins, because they're less likely than those first-time buyers to try to get those incentive dollars into buying down the mortgage, which is more expensive than some other incentives. How important is it to get that move-up buyer, and are they moving up with rates staying this high?
Oh, yes. I mean, it's such an important question. I appreciate it, John, because the diversity of our portfolio, I think, is one of the keys to the success that we've had for quite some time. And you're right. The move-up buyer is about a third of our business. Our resort lifestyle, some refer to it as the 55 plus, is another third of our business. And they're in a very different position. I mean, those consumers on average in the country today have over $400,000 in equity. And when you look at the impacts of what we've seen over, I'd say the last 3 years, probably since 2020, so maybe 4 years, we've seen 17% rise in income. We've seen 30% rise in actual home prices, but we've seen a 75% rise in payments. And that is disproportionately impacting that first-time consumer. When you think about our move-up buyers, our resort lifestyle buyers, nearly 40% of the homes today don't have a mortgage, and that's generally the move-up buyer. So they're a critical part of our business. And when we look at the average age, the other stat that I found quite interesting, when we look at the average age of buyers, really over the last 30, 40 years, the average age has moved up about 8 or 9 years. Once again, really speaking to the strength of that move-up buyer.
All right, one more video.
Now, we have pending home sales for October, but for that, we go to Diana Olick. Diana?
Pending home sales rose 2% in October month to month, according to the realtors. That's a beat. The street was looking for a slight drop. Sales were up 5.4% compared with October of last year, and this is the highest level on the index since March. This even though mortgage rates rose sharply in October, starting near 6% and ending near 7%. This count is based on signed contracts, so people out shopping during the month and inking contracts on a home. Sales rose in all regions of the country, even the South, where we saw back-to-back hurricanes. Sales of newly built homes, which are also based on signed contracts, actually fell sharply in the South in October. Now, this bump in existing homes recently is likely because there's just much more supply on the market. Active listings up 29% year over year, according to Realtor.com. And finally, my favorite stat, the lockbox indicator. This is a count of how many of those door key lock boxes are open to show a home. The realtors say those openings were up 7% year over year in October, which suggests much more demand moving ahead into the winter months. Sarah?
All right, let's close out this stream. Let's see what's going on with the markets. Just about a little over 30 minutes before the close, and I think we're doing quite well. So, if you guys did not get into the crypto stuff, go back to the beginning of this stream. Look at the tickers I'm playing. So MSTR, it might try to push through this rectangle into next week. We'll see how strong Bitcoin is on Black Friday. Hopefully there's no flash crash. Hopefully not. I'm hoping not now because everything looks real good condition-wise. And you should play MSTX instead of MXTU. MXTU is broken. For some reason, it's only doing about 1.5%, 1.5x instead of the 2x it should be doing. So I switched out to using MSTX, and we'll see how that goes for the rest. So no more shorting of MSTR. All right, guys, do not short anymore. From yesterday, that's why I said in yesterday's stream, I don't think it's wise. We've seen how it is now. I think MSTR on the charts look very good. 13-minute chart above moving averages, trying to consolidate, move up. If you look at the 65-minute, you see the crossover here, and now trying to stay above that declining 65-minute 18 moving average. So yeah, let's see if we can get to 423 on MSTR, and that's about, let's see, maybe about 8%. Okay, 8%, so 16% move up. Hopefully for MSTX. So let's say maybe we'll do 20%, right? So yeah, maybe about 125. Okay, 125 on MSTX. That's the near-term target I'm hoping for into next week, and then that'll be the end of that trade. See how it goes. It'll consolidate here, and we can trade it again. All right, SMCI, let's look at how that's doing. It tried to pump in the morning, but I think the semiconductor whole index is dragging everything back down, but we're staying above 35 so far. That's good. So if you're going to move across to SMCX, the 2x of SMCI, so this is the 2x ETF. Yeah, move it over. So this morning I got out when SMCI was around 37. I'm moving myself into SMCX instead. Okay, so that'll be more capital efficient for people to use less capital for 2x gains. You can move over there, or you can use options or something like that if you want. This will be trading in this range for a while I think SOX is trying to recover. But if we get something to pump it again, it should be fairly soon in December, hopefully. And let's see what GameStop. Oh, yeah, the new news today on GameStop. We have a date for earnings finally. So the official date now is December 10th. So good. I don't need to worry about next Wednesday. I thought that was the estimated date. We have 2 more weeks. So Tuesday, December 10th, will be earnings after market closes. So we have plenty of time to trade GameStop. Hopefully they'll pump it up before then. I also talk about Zim. If you have Zim on Black Friday's close, so into Black Friday's close, if you own Zim, you can get the $3.86 earnings. And then on Monday, people will probably sell it. So I'll be watching to add back more into Zim on Monday. Okay, so December 2nd, I believe. So if you hold this stock already and you hold it till Friday's close, then you'll get the dividend. If you get out on Friday's Black Friday's close, before Black Friday's close, you will not get the dividend. Okay, you got to be on record as a shareholder into the close for Zim. I guess you could do after hours. I don't know. Yeah. So remember, Black Friday is a half day. It'll close 1 p.m. Eastern. Okay. So yeah, consider all those things, and we'll see you later. Actually, let me look TLT for you. TLT, the bonds. So they were talking about bonds in that video I just played 2-3 videos ago. Yeah, it's doing quite well. So if you want to play bonds, you can do TLT. They'll give you a dividend every month. If you want leverage, you can do 3x of that using a TMF. I've been buying in the 45 area, and I'll probably continue buying if it holds these levels at 46 and above on TMF. TMF pays dividends every quarter. So December, at the end of December, you'll get a dividend about 3%ish, something like that. 3%, which is over the whole year. So if it's 3% and you get a dividend every month, that's 3% divided by 12. If you get every quarter, it's 3% divided by 4. So that's how you calculate what kind of dividend you'll get for holding shares of TLT or TMF. Okay, and looking at Mexico, we're talking about Mexico and the tariffs. Yes, I was talking about yesterday, I'm looking to buy. EWW is the ETF. And if you do leverage, you can do 3x of that using MEXX. Okay. Alrighty, guys. I'll see you when I see you next week. Or if I have a lesson and I have some time, yeah, maybe sometime over the holiday, I'll finally do one of those lesson streams. Okay, guys? All right. Later.